South Korea's startup investment market is on track to exceed KRW 1.5 trillion in the first quarter of 2026, surpassing the same period last year, according to statistical data from StartupRecipe. But beneath the headline figures, a more troubling picture is emerging. Funding for early-stage companies is drying up, while capital piles into later-stage businesses with validated models, widening a divide that is pushing the so-called valley of death deeper than ever. Quarterly investment opened at 375 billion Korean won in January, surged to a quarterly peak of 697.9 billion Korean won in February, and has held above the KRW 400 billion mark in March, sustaining an upward trajectory on the surface. Stage-by-stage data, however, tells a starkly different story. The most alarming signal is the rapid contraction of seed and pre-series, an investment the stages that sustain startups before they reach stable growth. Seed stage deals, which accounted for 22% of total investment activity in January, slipped to 20% by March. More striking is the collapse of pre-series, a funding which serves as a critical bridge for early-stage companies before they can access larger rounds. Its share plummeted from 15% in January to just 4% in February, recovering only modestly to around 5% in March, shrinking to roughly one-third of its January level within a single quarter. The data signals that the gateway between early-stage founding and the next round of financing has grown significantly narrower, leaving a growing number of founding teams exposed to acute funding shortfalls. On the other end of the spectrum, growth stage investment has expanded sharply. Mid to late stage deals spanning Series B through pre-IPO rounds represented just 5% of investment activity in January, before surging nearly fourfold to approximately 19% in February and holding at around 17% in March, cementing their place as a market mainstream. The trend was underscored by a series of large-ticket transactions. In February, SmartScore closed a 110 billion Korean won pre-IPO round, one of the quarter's most significant deals. March saw autonomous A2Z secure 40.5 billion Korean won, further illustrating the concentration of substantial capital in a small number of late-stage companies. The late-stage capital surge has been most pronounced in bio and deep tech. In biotech, Elicigen led the way in January, with a 42 billion Korean won Series C raise, followed in March by Must Bio KRW 35 billion, Series C, Minish Technology 30 billion Korean won, and Taikero's 20.8 billion Korean won, Series D. On the deep tech side, autonomous driving firm Autonomous A2Z's 40.5 billion KRW pre-IPO raise and robotics solutions company Twinny's KRW 20.4 billion Series C were confirmed in March, with a handful of technically advanced, late-stage companies absorbing a disproportionate share of total market capital.